Welcome to Module 6 of the Vwap Wave system. In this module, we're going to be talking about execution, scaling, and trade management. All right, this is going to be the real crux of your success with this system. Understanding and knowing the setups is the beginning. All right, how you execute on them is going to be what determines your consistency, profitability, and success with the system. All right, the system works based on how you execute. So execution is the bridge between setup and profit. You can have perfect context and a great setup, but if your entry is sloppy, your size is off, or your stops are random, you're going to lose. All right, so this module is about execution with intent, and not only intent, but with discipline and practice and expertise. All right, not just getting in, but entering with edge, protecting your capital, and learning to squeeze the most from your winners through either capturing a big part of the range or being able to take lots of good scalps and setups. Okay. So this is really, really important. This is what's going to separate the successful traders from the unsuccessful traders. Let's talk about entry tactics. We have limit orders versus market orders. All right. The limit order entry, like when I use join bid or join ask, this is best for balance trades or our VWAP point of control scalps. You want to get the best prices close to your level. So if we're approaching a lower band, I'll be joining the bid and scaling in to get the best average price. Same as of the opposite. With market entry, all right, this is best for breakouts, traps, backtests, or failed discoveries. That's when we finally have some buyers or sellers stepping in the direction we want after we waited for confirmation. Now we got to get in. We're probably not going to get filled on a limit order because it's already moving in the direction we want to trade. All right, so limit orders really aren't going to work well in that situation. All right, so we'll tend to enter on market, or you can try and do a combination of market and joining the bid or ask. All right, I'll typically do a combination. So now we're reacting to the confirmation and we're willing to pay that premium, all right? The spread between the bid and the ask, all right? We're willing to take a less ideal price because we need to get in now, all right? So you have to use the type of order that fits the setup, not always what just feels the fastest. We have candle confirmation versus touch entries, all right? These are two different ways of entering the trade. All right, a confirmation entry is where we'll wait for price to prove the rejection or continuation. So we'll get the reclaim, we'll get an engulfing candle. So that's where the confirmation candle is bigger than the reversal candle at our level, or a reversal wick. All right, nice big fast rejection. All right, these are a little slower and a little more patient, but tend to be better setups. Then we also have our touch entry. This is where we actually just get in at the level. All right, whether it's the VWAP, the outer band, lower band, value area, initial balance, and we're not waiting for confirmation. All right, this requires a tighter stop and faster decision making. And also I'll tend to scale in, all right, just in case it doesn't touch or if it breaks and reclaims so I can get the best price possible. All right, and we'll talk about this more. Confirmed entries, where you wait for the actual shift. All right, you're not just buying the touch, but you're waiting for the confirmation. These are lower risk and higher quality, but you may not get the back test or you might miss the move entirely. So there's going to be less of these types of setups. Touch entry trades and setups and traders, you're going to have a lot more setups. All right. I tend to be more of a touch entry trader. I trade both. All right. But I will take a lot of these as well. If I don't get in on the touch, maybe I missed it, then I can wait for confirmation if we get it. All right. So there's lots of opportunity here. Let's talk about the trade management process. And I just want to clarify, all right? There's no one perfect way to do this. Okay? Just because you're having options, and I know people don't always do well with options, like, well, what should I do? The touch entry, or should I wait for confirmation? All right? You have to find what works for you. I wish I could tell you that, just do the touch entry, right? Or just wait for confirmations. Okay. It's not that simple, unfortunately. You're going to have to find what fits you best, what you prefer. Okay. And eventually you can use both and figure out which the situation calls for. All right. If I see a really strong level that I like with lots of confluence, I'm going to use the touch entry. All right. I'm really expecting a reaction or that level to hold, at least for a little bit, for a small bounce. Right. And if I missed it, all right, I really like the level, but I missed it. Well, now I'm going to wait for confirmation. Maybe I'll get a confirmation entry on it. Okay. So that's typically how I trade it. Trade management. All right. You need to know your setup's personality. And that's kind of what I was talking about. Every setup has a unique rhythm. All right. So the Vwap point of control scalp is kind of like a quick pop, small move. You got to be fast to scale in or exit. The return to value setup, you can see sharp reversals here, big moves. Okay. But you might want to wait for confirmation first so it just doesn't rip through the band. Okay. But, return to value could be a good area to scale in across the band. And when it keeps going, you're wrong to just cut it entirely for a small loss. So that's nice about scaling in with micros, right? At a band expecting for a fade, right? If I get in with just a couple of micros and while I'm adding, it's clearly not slowing down, I could just cut the whole thing entirely. And at that point, I might have been half size, right? So I'm not taking a full loss. And again, I'm going to go into that in more detail. Fade extremes, slower rotations, let it work. All right. Usually it will get up to the band. It will sit up there while, there's some absorption taking place. And then we'll start to see the opposite side, buyers or sellers, step in. And then we got our continuation setups. We want to scale into those as we get close to the band, ride the waves. All right. Possibly get in on confirmation of the bounce for the next leg up. Scaling in, why and how. Oh, and just to mention on these guys, like this comes with experience. All right. I'm kind of trying to give you some insight into what these look like. But this alone, this explanation is not going to be enough. This is something you're going to learn through experience. So as you watch and take these setups, that's the experience and practice is going to get you good at this. Right? Just like learning to play a piano. I can decide I can want to play the piano. I can get all the sheet music. I could take lessons, but I'm not going to get good at it unless I practice. This is no different. Scaling in, why and how. All right. So we scale in for two reasons. I should say I scale in for two reasons. All right. Not everybody will scale in. Price often probes before moving. So our zone is better than one price, right? If I can scale in an area, I'll get a better average price than if I'm early. All right. So I can start to scale in, get a better price. And then when it starts to move in my direction, I can start to scale out into profit. This reduces risk of early entries being long, like I just said. All right. So now you're full size and you're early. So now you're watching your position go negative and pretty fast and large because you're at full size already. The standard method, you can divide your position into 2 to 4 chunks. So if you're trading 5 micros or so, trade 1 micro at a time. If you're trading 10, a full position, you could break it up to 2, 2, 2. I tend to trade a bunch of ones, and I'll get up to quite a few. I could get up to 10 or 20 micros, but that's just me. Enter near structure. All right, so we're approaching the band. I'm starting to scale in as we cross the band and then looking for that reaction, starting to scale out. All right, I only add if it continues to hold. All right, it's starting to hold. We're not moving. We're not blasting through it. All right, we're seeing absorption. It's slowing down. All right, getting a little confirmation there. Add. All right, but if it's blasting and it's not slowing down, I'm not continuing to add, guys. I'm cutting. All right, big difference. Don't add after price moves far in your favor. All right, that's chasing. Okay, now this is very different than people who catch bigger moves that trying to catch a trend day, right? Where they're adding on each pullback, all right? I don't do that. That's really not a part of this system. All right, we trade level to level. All right, we went through all the setups and we talked about the profit targets. All right, and nowhere in that setup or profit taking is there an opportunity to add in this system. Okay, while I'll admit that has merit, It just doesn't in this strategy, right? So, you will hear that from other traders, and they're not wrong. That's their strategy, and that's what works for them to get their huge wins on those days. And they need those huge wins because they only get one or two big trades. All right, the rest are a bunch of small losers. This is a very different system, so it's important to understand that. All right, when we scale out, all right, this is to lock in gains and let our runners work. All right, we always try and take something off the table, right? The first logical target or once we're quickly in profit. So whether we're running into a Vwap, a point of control, initial balance or extension, some sort of deviation band, if there's something in the way, we want to start taking some profits off. All right, lock it in. All right, this is what I talk about trading level to level. The second scale, you can let a bigger structure unfold. Third piece, if any, I traditionally don't hold that long. You can trail behind the swing of structure, so move a stop loss, break even. Right? I do break even. Once I'm in profit and I've taken some off the table, I'll just put that stop on break even. I could always get in again, but I've locked it in. Can't lose. Like partial profits protect you from being right? I nailed the trade. I nailed the movement. We got the bounce. I didn't take any profits, and it comes all the way back to where I got in. And if I don't get out there, it turns into a losing trade. Now it's on its next leg down, right? So you turned this beautiful trade. You were right on the inflection area. You were in profit. You didn't take anything. Came all the way back to your profit area. You didn't put a break-even stop, and now you're in a losing trade. All right? That's the last thing we want. Very frustrating. And that will put you on tilt. Let's talk a little bit about aggressive scalping. All right. I call it hyper scalping. I didn't invent that term. It's called hyper scalping in the industry. There's a lot of really successful hyper scalpers in stocks and options and futures. All right. I do this quite a lot and I've practiced it for a long time. All right. You will see me while live trading executing in a very fast in and out manner. All right. This is called the hyper scalping. It's a skill that can be developed with practice, and it delivers traditionally a very high win rate, 70% plus, even 80%. Some people get 90%. It also has a decent favorable risk to reward profile. You're shooting for at least 1-to-1. Right? Average winner is the same as the average loss. I can get a little better. I traditionally get a 1.5 reward to a 1 loss. That's where my stats have been as of late. All right? I'm right around a 70 to 75% win rate. So this is best learned through observation. I talk about it a little bit in the course, but to see it in action is best. So attending the live streams, attending the coaching classes, we'll go over this with actual visuals in real time. So be sure to watch all of that. These trades can be very fast. They can be less than a minute, and they're almost always less than 5 minutes long. How it's done. All right, so I wait for my setup. With the touch method or confirmation, they both work. I could do it on both. I scale in with micros around the core setup level. So I'm looking for the setup. I'm waiting. All right, now as we approach, I'm getting in with both limit and market orders to get the best average price at that setup zone. All right, as soon as I'm in the profit, all right, as soon as it starts to move in my direction, even a little bit, I'm starting to take off some size. All right, I'll take off some contracts, lock in some small profit. And as it continues to move, I'll quickly move my stop to break even. And as it keeps going, I'm scaling out into more profits, but I can't lose on the trade. It's really important to note, guys, that I'm looking for an immediate reaction. As soon as we get to the inflection point, whether it's an outer band, the Vwap, extension level, all right, I'm scaling in. I'm waiting for a pause or rejection. If it doesn't work pretty much right away, like a shot clock, I need to close it for a small loss. All right. But since I start with generally just a few micros, the loss is pretty small. And this is absolutely key. And that's one of the main ideas of scaling in, that when you realize you're wrong, right? The idea is not to keep adding. The idea is to cut it for a smaller loss as if I had small size. Now, my stop loss in this is generally often a dollar amount based on my risk parameter. So, for example, I could be willing to lose $200 per trade. All right, so I'm watching closely the P&L on that trade. It's right there on the chart. As soon as it's down 200, I hit the flatten button. All right, it's a loser, max loss. All right, but it generally gives me a lot of room to wiggle if I'm trading micros. Now, it's not always $200. I could be willing $500 or even more. There are some tools that assist me in the hyper scalping. I use Tick Strike. I often have it on my live stream. You can probably hear it. It's an auditory tape reading tool. This allows me to hear. You know, it's very tough to watch the time and sales. I'm already watching a lot. I'm watching the price action. I'm watching how it responds to my levels. So I can't watch the time and sales too. Right. So it helps to watch the price action and use my other senses like my ears to hear the tape. All right. This will allow me when the pressure is either starting to build in my direction that I'm trading in for the scalp, or if I'm trading contrarian, I'm buying, but there's still sellers. I want to wait for those sellers to slow down. Right? There's some absorption, price isn't moving, there's sellers, they're slowing down, they're weakening. All right. I can scalp that as well. So it's not always just buying with buyers, selling with sellers. All right. I can wait for a slowdown in the contrarian. There is a free 7-day trial in the Discord to Tick Strike. So you can try that out for 7 days with no obligation, no risk. So I highly recommend you give it a whirl, but you should also hear it in my stream. I have it on all the instruments. So I'm listening to gold, to the indexes, oil, natural gas, silver, copper, soybeans. They're all on Tick Strike. And then I also use a cumulative delta or histogram. So trying to scalp when the buying selling is clearly in my direction, or if I'm seeing absorption or divergence. All right, let's talk about what that looks like. Above is price, below is the cumulative delta. The cumulative delta is buyers versus sellers. All right, so this is actually all the contracts bought and sold on the S&P 500. All right, when it's in this positive, this is zero. This dotted line is the zero mark. When it's in the positive, that means there's been 80,000 more buyers than sellers. All right, so it's in the positive. All right. Traditionally, these are usually, if there's no absorption and confirmation, a buy candle will be the same here. If it's not, there's absorption. There's passive buyers and sellers, and that's what creates divergences. So you can see price is moving down, but the cumulative delta actually made a new high. All right, that means there's more buyers than sellers, yet price is moving down, which means there's a lot of passive sellers. All right, this is not a confirmation. This is the opposite. This is a divergence. All right, so this price moving down is not being confirmed. Okay, just something to be aware of. All right, I would probably not buy this, right, because price is moving down. Okay, the opposite is confirmation. Price is moving up and cumulative delta is moving up. All right, this is a good opportunity to get long, probably looking for price discovery or longs in this particular situation. So this helps. And then there's a histogram version where you could see buying or selling on any particular candle. So if you're trying to go long, it helps to see buying in that candle and price is moving the same direction. Just used for confirmation. I don't want to complicate things. I wouldn't recommend adding this too soon in your journey. It can just be one more thing to look at and confuse you. But it is a tool, and I do use it, so I wanted to put it in here. But I found it's too confusing for most newer traders to the system, so it's almost better to leave it out, but I did want to include it. So let's talk about stop placement and adjustment. Where to place your stops, all right? Ideally, we're letting the structure define our stops, all right? So behind the most recent swing high or low, beyond the Vwap band or a rejection wick, outside a failed breakout level, low volume node, all right? All great levels to put stops, all right? Clearly will show you you're wrong. Now, everybody's afraid of liquidity sweeps and traps. That is a nature of the game. Should not stop you from putting stops at these levels. It's there to protect you, all right? Sometimes we'll get stopped out. That's just the way it rolls. It's part of the game and it's built into our system. The alternative method is to have a specific dollar amount, and this is greater for scalping. I like this for scalping. So specific points relative to the symbol. It could be like 3 points on ES or 10 points on NQ. But when using this method, you need to take range and volatility into consideration, right? If we're in an extremely volatile day, we have a 50 point 5-minute candle on NQ, then a 5-point stop is just going to be way too tight. You're going to be easily stopped out. You need to have some room to work. So take the volatility into consideration, right? How big are the 5-minute candles? What's our current average true range? All right. And you have to scale that appropriately. Okay. So you have to be mindful of that. Let's talk about moving our stops. All right. This should be about reacting, not predicting. All right, we move our stop to break even only when we scale out in profit if scalping or if price reaches our profit target. All right, now we're playing with house money. If we see a structure shift, such as a newer higher low forming, you can trail underneath it. All right, for a little more old school method. Or you can do order flow changes direction on you, right? So I'm in a long and things are going well, but all of a sudden a bunch of sellers jump in. I could hear it on the tick strike. It's in the cumulative delta, right? There's no reason for me to sit and wait for it to hit my stop. All right. I can just get out now. I can always get back in later. And this is the most important part, guys. Can't emphasize this enough. Do not move a stop just to avoid a loss. All right. This is undisciplined and dangerous, right? I'm just going to give it a little more room, just a little more room, right? Don't do it. All right. You'll regret it. And the time you do it and it works out, it's only reinforcing terrible behavior and it's very undisciplined. So try to get it into a position of not doing it. Let's talk a little bit about trade journaling. All right. Both during the session and after your trades. All right. So you can document your trades in real time. All right. You're going to want to record the setup name it. If you can't name it, it's not a trade. All right. Why did you enter? What was the trigger? Was there a back test? Was there confirmation, order flow? What was the context? Are we in balance? Are we in trend? All right. Where did you put your stop? Where was your initial target? And this helps you stay present. And also when you go to review and journal later, you can easily remember everything that happened. All right. So you don't have to go over 10 trades later and try and figure out what you did. All right. So keep a pen and paper handy. Then we'll have our post-trade reflection. And this will help you build better pattern recognition. You're going to ask yourself, did I follow the setup rules? Did I enter where I should have or I said I would have? Was I reactive or impulsive? Did I impulsively get in too early? Or was I reactive when we finally got the rejection candle or a trap set and I got in right away in a market order perfectly? What would I have done differently in hindsight? This is where your real progress comes from. It's not during the trade, all right? That's practice and will help you execute, but upon reflection is what's going to help you grow and evolve and level up as a trader. It's like going to the gym. You don't get stronger by lifting weights. You get stronger by lifting the weights and then resting afterwards. The muscles are regrown when you're resting. All right, same concept. Let's talk about the execution mindset. We trade like snipers, not a machine gun. All right, one of the main reasons I trade the 5-minute, even though I'm a scalper, is because it keeps me patient. Slower moves, all right, less candles, less wiggles, lower time frames like the 1 minute, or even these second charts that I see some people trade, and I've tried them. This creates a lot of movement, and it's easy to see a lot of setups and easily overtrade. All right, it's just too much. You could be in a trade every minute with a second chart. It's too much. All right, the 5 minutes slows me down, and I can see where the levels are and keeps me patient in getting to them. And I take less trades and I wait for the better, higher quality setups. All right. Now remember, if you can't name the setup, it's not a trade. As a trader, it's extremely important to know when to do nothing. All right. The best traders know when not to trade. Whether we're chopping around Vwap with no clear direction, right before or after a Fed interest announcement or major data news drops. All right. Headline world news, wars breaking out, tariffs, All this stuff we have to be very careful of. If price is between bands with no structure, okay, right in the middle of two areas, right, there's nothing there, or we're above every level, right, and we're just ripping, going straight up, there's no trade. Same with no down, going straight down, no levels. We sit on our hands, wait for a pullback, wait for a level, and we call that edge preservation. If there is no setup, there is no trade. In summary, our goal is precision over perfection. All right, we can't win every single trade. All right, even at my best, I am still losing 2 or 3 trades out of every 10. All right, it's a decent amount of trades to lose. We have to manage our risk ruthlessly. We enter only with content when there is a setup, and size consistently according to our risk parameters. And that's different for all of us. We're all trading different size accounts. We're all different spots in our trading journey. You need to know what your risk parameters are. If you need help with that, drop it in the Discord. We can talk about it. Execution is the discipline that makes all setups work over time. We trade like we're the casino. All right, with this system, the Vwap wave system, and our setups, the probabilities are always in our favor. And over a large selection of trades, we will be profitable. This is our edge. One base hit at a time. This is not a home run seeking trade system. All right, if you're looking for massive wins, this is not the spot to be. This is for those who are looking to build consistent income. All right, not gamble in the markets. We trade like the house, not the gambler. Casinos don't get rich in one night. All right, they get rich over time out of all the games that are played over the night, over the weeks, over the months. All right, they're giving out jackpots, right? They win by small little wins, a small percentage. All right. Up next, we're going to talk about risk management and trader psychology. I love this module. Module 7, we're going to explore defining daily risk limits that protects your capital or your accounts, how to deal with drawdowns and bounce back, how we handle tilt, hesitation, and overtrading, and mental frameworks used by consistently profitable traders. It's going to be an excellent module, and I look forward to having your participation. See you there.